Welcome to Fintech Chatter, presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Welcome to Fintech Chatter, the show for all things fintech down under. I'm your host, Dexter Cousins, and today's guest is renowned author, advisor, and commentator on digital financial services, David Birch. David is currently visiting Australia, and he's here to chat all things digital ID, digital wallets, and Metaverse. But before I chat to David, a quick ask for your help. Aussie fintech is a bit in the doldrums. Last quarter, we saw the lowest investment levels since 2017. And I created this podcast to elevate Aussie fintechs to a global audience. We're listened to in over 40 countries, but like funding levels, we've seen listeners drop too. By sharing the podcast to your network, you help to raise the profile of Aussie founders, many of who are doing it tough right now. You can help the show by leaving 5-star reviews in the Apple and Spotify app. Or if you're new to the show, give us a follow and make sure to leave a comment if you're watching on YouTube. David, welcome to the show.
Thanks for having me, Dexter. It's good to see you again.
It's good to see you on Australian turf. Never done that before in the same time zone. Well, I am. I don't know if you kind of physically you are, mentally you might be somewhere else.
Yeah, mentally it's still adjusted, but no, it's great to be back. I love working in Australia. You know that. Yeah,
and what brings you back to Down Under this time?
Well, I have a couple of things going on in Australia, and also I'm involved in a couple of things in New Zealand as well. So I was able to combine everything into a trip, and then of course, I mentioned to a couple of people that I was coming down, and in particular with John Ryan at PayEd, we've set up another couple of events as well. So yeah, so it's
we'll talk through your itinerary because it's pretty significant, right? You've got quite a lot going on.
Yeah, it's turned into a fun couple of weeks. It has.
Yeah. And look, I know there's many people in my network who I think would love to just see you in person and come up and say hi. And so we'll talk about the itinerary in a little bit more depth towards the end of the show. But really fascinated to and very eager to chat with you about a report that you published recently with my friend Victoria Richardson, which is on Metaverse. And when I hear that word, I kind of shudder. And when I saw Victoria was working on a report and yourself, I was like, oh no, is this the great big sellout? But then I read the report and I was instantly soothed by, I think, the first paragraph where you define Metaverse.
Yeah, well, I mean, the story to that, Dexter, in narrative form is, I'd been interested because I'm very interested in transactions of all kinds and where electronic transactions are going. I was, of course, interested in the metaverse, but I wasn't particularly interested in the interface. I mean, I'm not an expert on it. I'm not that interested in it. So quite how the 3D or immersive or 2D plus or whatever is going to work. Obviously, it's important, but it doesn't interest me as much as the transactions. And the honest truth is I got invited to an event, actually a book launch, in the metaverse. And I was interested in how you sell things in the metaverse. And they were doing it using, some barcodes. You come out and you scan a barcode in the 2D version of the world, and then that takes you to a website, or there were some objects in the 3D world you could touch, which would then launch a website on another browser, and you could buy things there. And it sort of worked, but it was all a bit clunky, and it kind of set me thinking, but what should transactions inside the metaverse look like? And then that led me to think, well, hold on a second, what's the metaverse anyway? How can we think a bit more clearly about that? And I had one or two ideas about it, and I discussed it with a few different people, and I came up with which I thought was a sort of useful model of the whole thing. And then I thought, well, actually, if I'm right about this, what I should do is write a paper, for a peer-reviewed journal and see what, my peers think about it. And that'll tell me if I'm onto something. And I sat down to write this out, and I just couldn't quite think clearly enough. And I'd been talking to Victoria about a couple of sort of related things. And because of the work she's doing in Miko, she spends a lot of time thinking about wallets and digital identity. And so I said to her, please come and help me with this. And we worked on it together. And, the result has been fantastic. In fact, it's been more than fantastic, because not only did the paper for the Journal of Payment Strategy and Systems come out very well and was accepted, I was so taken with the clarity of some of the ideas in there compared to a lot of the fluffy stuff I see about the metaverse. I took it to my publisher and said, do you think people would be interested in a book that's trying to put together a narrative about the metaverse and digital identity and Web3 to help people in business communicate between the management and the technologists and the visionaries and the regulators and so on. Not to talk about the programming and the bits and bytes, but to try and talk about what is the story? What's And they said, yeah. And so that's where we are now. Victoria and I are working together on a book about it. A few other people thought this was quite an interesting topic. So we have a couple of lunches and dinners and events organized around this over the next couple of weeks. And I've been quite taken by the feedback, to be honest.
Yeah, it was actually like a sanity check for me, particularly when I read the first few pages. And why I say a sanity check is you referenced First Life. And I remember in 2004, I worked for a company and we had an office in Second Life. And we had an office in Second Life. And we were like, what is this? We just could not see it taking off. And then, 18 years later, right, we've got, people going crazy about Decentraland. And I'm like, this is Second Life all over again, right? And so, and then the kind of juxtaposition to that is seeing my kids who are 12 and 11 absolutely immersed in, worlds like Roblox and spending all of their pocket money on these digital currencies, in-game currencies, right? Buy these avatars and kind of blocks to go and build a world, and seeing that is very real. That is an absolute use case, right, for the technology.
Now, I had similar thoughts about Second Life, but also the kind of virtual worlds like Minecraft and Roblox, and I mean, I'm not sure if older people, me included, quite understand just what a phenomenon those are. As shared spaces where people come together to create. They're an interesting phenomenon. And I think we all understand that in some ways, games do play with new technologies and new ways of thinking about things, which is very useful. But what I was thinking was, okay, well, when people start talking about the metaverse, what actually is the difference between, it's fun playing World of Warcraft or Call of Duty, but I wouldn't call them metaverses. So what's the difference between a virtual world and a metaverse? And the Financial Times had a very simple definition about it. It's in the book. I can't remember when it was, a couple of years ago. And the Financial Times said, well, a metaverse is the virtual world, of course, but it's also about property. This is the crucial thing. If you buy a hat in, one of these online metaverses the kids play in, it's not actually your hat or your avatar's hat. Mm-hmm. It belongs to the platform, and the platform could at any time delete that hat or make 1 million of them or whatever. It's not yours. It's not real property. You don't actually own it. So then I started to think, well, okay, well, what would be a way of owning? And of course, this then leads you into the world of tokens and Web3 and this kind of thing, which is an obvious thing. And then you think about, okay, but how do you turn that into a market, a commercial space, a business space? Having the tokens isn't enough. You need ownership. You need identity in that space as well. And it's only when you've got all of these things together, the virtual worlds, the property, and the identities, when you bring all of those together, then you have a new place to do business. Now, of course, that sounds a bit weird saying that. And everyone got a bit bored with the metaverse because they mucked around with those Facebook funny people with no legs. And everyone's like, oh, this sucks. And they don't pay any attention to it. And then, of course, Apple came out earlier in the year with their glasses. And everyone was like, well, $3,500, they're insane. No one's ever going to pay this for these kind of things. Or forgetting, by the way, that when I mean, this is a long time ago now, but when I got my first Apple, which was an Apple IIe, which I was very excited about getting, I can remember going to the dealership. There were no Apple stores back in those days. I bought it from a computer dealer in San Francisco. And I remember going to buy my first Apple IIe. And if memory serves, it was like $2,500 then, which is like, I don't know, $1 million now or something like that.
Yeah, it was a house.
Yeah. So the point is, $3,500 sounds like a lot, but it's not. That's what a PC cost, you know? So when you've got people like Apple coming into this space as well, I began to think, okay, well, how do businesses go about formulating a strategy? And Victoria and I are both very big on narrative and storytelling. Like you have to have the people around the table share a common narrative. Otherwise, they can't communicate properly with this. And that's where I thought things were a little bit fuzzy and where I thought we could help. So we have a useful working model. Around each component of that model, we've begun to develop the narratives that you saw in that paper and which we're expanding on for the book. And then the conclusion of that, I mean, spoiler alert, the conclusion of that paper was that it's the wallet space, which is a really very interesting space because that's where those tokens are going to live. That's going to be the bridge between the real and virtual worlds, if you like. And when you see what's going on with AI and smart wallets and all this sort of thing, you get into these really interesting questions about how transactions are actually going to work, who's going to be involved in them and all that sort of stuff. So what went from being, oh, this is kind of interesting, I think people might be writing this off a little bit too soon, has turned into a very kind of fun area of exploration. And the more that time goes on, the more it seems that there might be really something in this. And the argument I would put forward, if people are thinking about the metaverse as you know, just these virtual worlds, if I talk to you about financial services in the metaverse and people just picture, I don't know what, like, I don't know, selling each other insurance in Call of Duty or something, I don't know what they're thinking about. Well, of course, that's not going to get anywhere. But you see what a mess the internet is. I just before I was talking to you, I was reading an article to The Economist. I can't remember about, you know, so the internet is being ruined, you know, and a lot of people put this down to the fact that the internet was originally built. You've heard people say this a million times. It was built without an identity layer. It was built without a value layer. And people thought that perhaps, you know, Bitcoin would come along and fix those sort of things, but not the point. But that's not going to be the case in the metaverse because of the Web3 and digital identity infrastructure. The metaverse is going to be built with an identity layer, and it is going to be built with a value layer. And what that means, I think, is that ultimately business will be cheaper in the metaverse. And it, you know, so it's not an ideological thing. It's just this will be a better place to do business because it's more safe, it's more secure. It will be a reputational economy, obviously, because you know you're dealing with avatars. You're not dealing with people, and so whether you choose to do business with somebody will be a lot more to do with their reputation. You know, like think eBay stars, but on steroids. And business transaction costs should be minimized in that space, I think. And so that's why so many apparently sensible people are continuing to look at what financial services in the metaverse will look like. If it was really just, I don't know, buying hats in Roblox, we wouldn't be so interested in it. It's not that. It's a safer, more secure place to do business in the future.
Yeah. I think one of the fair criticisms about fintech over this last decade, David, is it's failed to fulfill its promise. And I believe that the reason for that is that, what we've done is applied technology to analog solutions and products that many are centuries old. And if you look at, what we've seen so far, we talk about digital transformation. It's really been an extension of the computerization of the workplace that happened when I started my career in the 90s. And I kind of still struggle, even being really close to this space, to look at where the genuine innovation is from a consumer perspective. And I want to pose the question to you: is the metaverse then an opportunity for us to completely rewrite not just how business is done, but what is it that we're actually transacting?
Well, I mean, let me answer the question in two parts. Your fundamental question is right, which is, what has fintech really done? And I think there are three sort of broad categories. So there's one category of fintech. I think it was Benedict Evans that said this, and he's right. An awful lot of fintech was about giving Americans the things that everybody else had for years.
I think that's absolutely, that's great.
On the same day, you didn't have to write checks and all that sort of thing. So a lot of fintech was about. So that's one category. The second category was using technology, as you've said, to digitize processes. And in some cases, those kind of things could be done more efficiently, but they didn't change anything. And I don't want to bore everybody senseless with the figures, but you know the figures as well as I do. If you look at, for example, in challenger banks and so on, that peaked about 3 years ago, something like that. If you look at the proportion of deposits that are held by the incumbents versus the challengers haven't made a dent on it. In fact, I think in most countries, the incumbents actually now have a higher share of deposits than they did before all this came along. Now, some of for example, one of the companies I quite often highlight is Wise, because Wise is the foreign currency fintech.
Yep.
Because I use that all the time because I have clients in different countries and I bill in different currencies. And it doesn't do anything flashy or amazing. It just lets me have accounts in different currencies and I can move money between them instantly. So, for example, if I was moving money from an Australian, bank account to my bank account, this will be done in seconds. It's so does it do anything world shaking? No, but it uses technology to do it better. And I quite often would say to banks, my banking app is terrific. It's really improved because of fintech. My Barclays app is way better now than it was, a few years ago, and I really like it. I use it all the time. But the products that are inside it are the same products I had 25 years ago. It's a debit card, a mortgage. They're nothing new. I don't use BNPL because I'm too old, so I don't really use anything new. But the Wise multi-currency account is something I didn't have before. So it's definitely brought something. And actually, it's a good case study in some other ways as well. Probably not the subject of today's podcast, but Wise was the first fintech that took advantage of the Bank of England's new rules about allowing non-banks access to settlement accounts if they met certain criteria. One of the reasons why Wise is so good is because if I move money from my Wise account to my Barclays account or vice versa, it's done in 2 seconds.
Yeah.
But then there's a third category of things that you just couldn't do any other way that, are entirely native to the digital world. There is no kind of analog version of this. And so when you start getting into things like smart contracts and tokenization and things like that, you begin to see something different emerging. Now, of course, the fans of this sort of thing would talk about decentralization and the lack of intermediaries. I probably think of it more in terms of sort of different intermediaries. But it at least puts a stake in the ground as to what fintech should actually be. So if I ask you the sort of tough question, which is what's the point of fintech? The big picture answer has to be to reduce the cost of financial intermediation. Or let's say you use new technology to reduce the cost of financial intermediation, to bring benefit to the whole economy by reducing the cost of financial intermediation. And we haven't made much progress on that so far. But maybe there is a genuinely new way of doing things that's just around the corner that can really do that. And it's not like, so, you know, you see a lot of stuff in the press right now about, I mean, I was just reading a thing in The Economist on the way over about Larry Fink from BlackRock as the world's biggest asset manager. So why are people like that talking about tokenization? It's not some ideological thing to do with decentralization. Their interest in what this is about is basically doing business more cheaply. If you can do away with clearing and settlement, you know, if I can just send an asset to you and it goes from me to you, it's a lot cheaper. So I think there is at least, you know, you can at least think that there are some possibilities that there's some real change just around the corner, which would change those industry structures. And I'm very fascinated by how that's going to emerge. And there's a couple of reasons for that. So one is because obviously I think that the ways of doing business there, programmability and all this sort of thing, zero knowledge proofs and homomorphic encryption and blah, blah, blah. So there's very new ways of doing things, which actually it's quite hard to explain to people if they don't. Like, if you can only think, for example, use identity as the example. If you can only think of identity in terms of like identity cards, index cards in a filing cabinet, trying to understand zero knowledge proofs is really quite difficult. But if you grow up in that sort of crypto native world, zero knowledge proofs are an integral part of that, and applying them to other things, you know, would be sort of straightforward. So there's new ways of doing things that we didn't have before, which I'm kind of excited about that. But the other thing I'm excited about is the confluence of these things with AI. And you know, when we talk about financial services, we kind of imagine, well, I just said it with the example, me sending you money using Wise. But actually, most of the transactions I get involved in fall into two really rather distinct categories. Like, most transactions are transactions I really don't want to be involved with. Like, you know, paying the bus or whatever. Like, I don't care. Can you just do it? Like, I was very upset the other day because you know, we have an app near where I live at the state. You know, when you park your car, you use an app to pay for the car parking. And I forgot, and I got a fine. You know, I had to pay a fine because I didn't pay the parking ticket for my car. And I was so upset with my phone about this because I'm like, you know, come on, phone. I mean, you know what I was doing. I do this all the time. I drive to this place, I park, I call up, I pay. Like, why am I even in this loop? Why can't you just do this? Like, and now look at it. Now I got this fine because I forgot to do it. And this is mundane and stupid stuff that human beings shouldn't be involved with. Well, a lot of transactions are like that.
Yeah.
On the other hand, there are some complicated transactions, you know, to do with like moving money around for pensions and things like that, which I just really don't understand. And the sooner there's a giant, super intelligent killer robot to do that for me, the better.
Yeah.
Like the idea that I could know more about this than a bot is, and yet these are really important financial things. So that's the other aspect to this. So when we talk about, you know, tokens and identities and smart wallets and all this sort of thing, you have to remember a lot of these transactions. I mean, I'm sure the overwhelming majority of these transactions won't be between people. It will be between bots.
Yeah.
You know, I saw today about Circle announcing their programmability, you know, their APIs so that people can build Web3 apps that use the Circle sort of stuff. You know, you start slapping AI on top of that, and pretty soon you have something very different from the financial system that we have now. And also, and you know, again, I'm not smart enough to know exactly how that's going to work out, but I can sort of see that that's a real change. When a bank gets hold of some AI and uses its AI supercomputer to sell you credit card offers, well, that's great, and I'm sure it can do a really good job on that. But it's not a revolution.
Yeah.
But when the customers get AI, that is a revolution.
Yeah.
And that's happening much sooner than we, or at least I, thought was going to happen. I wrote some stuff about this at Wired magazine, actually, a few years ago. I thought I was being clever, sort of thinking about this kind of 5 to 10 year horizon. It's all happened much quicker than we were thinking. So anyway, that's a long answer. That's a long answer to the question, but all of these things are swirling around together.
It's funny you mention that, because I remember having this conversation with one of the kind of early neobanks in Australia, and they were talking about this very premise of an AI platform that was essentially your financial advisor that would move your money between one fund to the other. You'd put in there that, hey, I'm going on holiday, we're going to go back to the UK, it's going to cost $20,000. How do we save for that trip? Switch your credit card to this deal, you'll save $1,000 a year. It would work with you in mind. And my observation and kind of pushback to that was that, but the AI would have to work for me, not for you. And how would I know that the AI was doing things that were in my best interests and not in yours, right? You're going to have to completely flip the model.
Yeah, no, it's got to be a bit more. It's got to be a bit more than that. But I don't think it needs to be. Like if you think about that example, well, think of it this way around. So I remember writing a thing, a couple of years. I just thought it was very interesting because they have this DARPA, Defense Advanced Research Projects Agency. And I was thinking about this because of Maverick last year, the film, the Top Gun, all this sort of thing. So back in 2020, the DARPA challenge, the dogfighting was won by the AIs. So the AI pilots defeated the human pilots 5 times out of 5. There's no way a human pilot can defeat an AI pilot. But this was on running simulations. In less than 3 years, they went from simulations to now there's an actual F-16 flying out of Edwards Air Force Base in California that's controlled by AI, And I'm sure Tom Cruise is very good at it, but I'm pretty sure the AI is going to be better at it.
Yeah.
So if there's an AI that can fly F-16s and dogfight with them, how much more complicated would it be for an AI to say, oh, Dave's parked the car, Dave's got out the car, Dave's walking towards the station, maybe I should remind Dave that I'll pay the parking for him. Like, it's really not, in every sense, that's not rocket science to do that, to get that basic stuff.
That's just basic decision tree, right?
Yeah.
If this X happens, do Y.
Yeah. So, a lot of this stuff, how long would it take my phone to learn that? Once I've done it 3 or 4 times, the phone would know, okay, I get it. I know what's going on, So anyway, without getting distracted by F-16s and whatever, the point is, you have this metaverse, you have the virtual worlds where transactions can take place. You have tokens, which are passed between these kind of economic avatars that exist within these worlds. But actually, most of those won't be controlled by people. Most of them will be controlled by bots.
Yeah. And
I think that's the narrative that we're developing and trying to think through. What does that mean for different types of, like, for example, if you're an insurance company, it's in my head because I ran a couple of workshops for an insurance company around this. If you're an insurance company, it's all very well talking about this stuff. It's interesting, but what is your actual strategy going to be? Like, you've got to somehow think about, are we going to use the metaverse as a place to engage with customers, to meet with customers, to transact with customers? Are we actually going to insure things in the metaverse, or are we going to use the metaverse as a method for insuring things that are in the real world and all this sort of stuff? Just to get that strategy in place requires a sort of shared understanding and a shared vision, which is coming together. But do you think then, yet,
listening to you talk, is the metaverse a place or is it infrastructure?
Well, first of all, there's going to be lots of metaverses. I mean, there's not going to be a metaverse.
Yeah.
There's going to be lots of them. And, the metaverse where, you and I might meet to go to soccer matches and discuss soccer matches and see the soccer match through one of the fans who was there's eyes, or to see the match through the referee's eyes or whatever. That's kind of one kind of metaverse. The metaverse where you and I, as, I don't know, insurance brokers, where we might meet to lay off tankers or something, that wouldn't be the same metaverse. It wouldn't look the same. It wouldn't be constructed the same. I was talking to somebody about foreign exchange. If we're traders, you could imagine a metaverse where, the contours of the landscape are something to do with the spectrum of trades available to us. And I don't know, the size of the trees is something to do with the spreads. And in us, we're trying to strike a deal. We're trying to find a path through the forest or something. I don't know. I'm not smart enough to, but you know what I mean? That wouldn't be the same metaverse as the metaverse where I go to buy books.
Yeah.
Or, so there's going to be lots of metaverses. And I thought actually one of the more interesting aspects of the Apple approach to this is it was clear, I thought anyway, in those Apple demonstrations that, the metaverse as an app inside those glasses, lots of metaverses with different apps, to me makes complete sense. The metaverse where you and I would meet in a couple of years' time, maybe we'd be doing this, but we'd be doing it in 3D. We would feel like we're sitting next to each other, talking to each other. The people watching it maybe would feel like they're sitting in with that as well. I don't know. That's not going to be the same metaverse where I have a friend who's a data scientist I won't say the company. He's a data scientist for a very big company. I don't really understand data science, but the idea of trying to make sense out of these numbers when you've got these AIs supporting you, you've got other people. The idea of doing that in a kind of shared virtual world, which is optimized for that environment, is pretty attractive as a way of increasing productivity. So, no, there's not going to be a metaverse. There's going to be lots of different metaverses. I'm sure of it.
One of the things that always strikes me, so we've got solar power at home and a battery, and it's one of the issues that I have around tokenization is, there's so many different events that have a clip on the ticket. I remember listening to Vitalik Buterin talk about Ethereum and its use case on a podcast once, and he described somebody making an international payment, and there were about 8 additional steps to what you and I have to go through when we use Wise or Revolut. There's already much easier solutions to this that are actually cheaper as well, because if you'd seen the gas fees at the time, it would have been exorbitant to go and exchange into Ethereum and then make a transaction and set up these wallets and keys and all of these things that were just really prohibitive to it. And I look at my kind of energy usage, and I've got it where I can actually send energy to the grid, and I get paid back in dollars on my next bill and get a credit. And so it struck me that, surely, why is there a need for any token in that when we just have a ledger that measures the amount of energy that I've used, the amount that I've put back in the grid, give me a credit for it, and when I need it, I can withdraw that energy from the grid. And it kind of seems that with tokenization, we're kind of adding this additional layer to reduce the costs and the friction in a process that already exists and is kind of.
But that's because you have a centralized ledger there. I can agree. There's an awful lot of things that seem to be trying to just shoehorn blockchains into things where they don't make any sense. But the point about tokenization, I think, is different. This idea that if I send you, like, let's say I try to sell you a share in Optus or something, then to do that, it requires. Actually, I don't know what it requires, but there's brokers and dealers.
It's not worth it.
Front offices and back offices and reconciliation and settlement and all sorts of things going on. Whereas the idea that, I would send you would send me money, and then I would send you an Optus token, that seems quite attractive, And then you start to think, well, okay, if you can do that for things like Optus stock, essentially, why couldn't you do it for other things? Like, maybe I want to hold some gold in my portfolio. Well, I clearly can't be bothered to mess around actually buying some gold. I'm not going to do that. But if I could buy some gold tokens from some reputable organization to do that, maybe I would do that. And then you start thinking about, well, what about other commodities? Why can't I have, I don't know, iron ore or something in my book? Like, people could tokenize anything if it's done through, regulated institutions that have the right frameworks and stuff like that. And that does lead, if you're trying to think far future, I think that does lead down a path which has some very interesting implications. Because if you can hold baskets of commodities, goods and services, then why would you need the intermediary of money? Because, if I do a deal with you, then my computer and your computer can work out which basket of these commodities they want to trade around. There'd be sort of no point turning them into money. You might as well just hold the gold and oil and
I think, which is going back to the point I was trying to make around energy, right? It's like, why is money there? Why is a token there? Which should just be an exchange of the actual commodity itself.
Yeah, I think that's right. So if you're thinking further future, I think you think down that line. I think in the short term, obviously the tokens, well, certainly the fungible tokens that will be traded most, whether in the metaverse or anywhere else, will be stable coins. Because I was just writing a piece about it right now, actually, because I saw a tweet from someone which kind of reminded me about this. So a guy, he said, I've just sent some money to a friend in Argentina, and he asked me to send Tether dollars instead of Bitcoin. So, and so that sort of made me think, well, actually, that's an interesting point. In most places, the reason why people use cryptocurrencies really is a bridge to get dollars. What they really want is dollars, but they can't get dollars, so they make do with cryptocurrencies. There is some speculation, obviously. But a lot of people just want dollars, and so dollar stable coins, and we're all thinking about this because of PayPal launching their stable coin this week. I think, dollar stable coin, so if I'm in the metaverse and I'm going to give you, I don't know, I'm going to give you a concert ticket, right? Which would be an NFT. So I'm going to give you an NFT. You're going to give me some money. That money would be in the form of tokenized fiat currency, I would have thought, in most cases. The most acceptable of those tokenized fiat currencies is US dollars. So the more, tokenized US dollars that are out there. And actually that also leads me to think another thing as well, which I also wrote a book about, actually. But there may be some interesting competition there. So like US dollars are the desirable stable coin because dollars are the desirable sort of physical currency. But what if there were other currencies that had, what if there was like an Australian digital dollar, which people valued because it had more privacy or more transparency, or what if there was something else other than the value? If you're constructing these currencies, if you're building these stable coins, they don't all have to do the same thing. They can do different things, and so that also leads me to think, there's potential for more competition between currencies in that space.
Interesting. I wanted to talk about digital ID because it's such a massive topic here in Oz. Personally being affected by huge data breaches that we're talking about. I think nearly the whole population, I think, of Australia has been impacted one way or another. It's led to, massive instance in, just my day to day, where I think I can count 5 or 6 fraud attempts per day, calls where, there's nobody on the end and, it's recording your voice or, with the intent of recording your voice to be used by AI. So it's kind of become, more than a crisis, I believe. Now, there's 2 things that kind of strike me, right? You speak to the man in the street or the woman in the street and ask them what they think about crypto or digital currencies, and they're likely to say scam. And kind of bringing those 2 worlds together, so digital ID and digital money, how do you overcome the stigma that's attached to those 2?
Oh, that's a difficult question. I mean, it's a different kind of stigma, I think. So, so if you say cryptocurrency to people and they think scam, well, basically they're right, aren't they? I mean, you can't criticize people for thinking that when there's billions of dollars going missing all the time. So, but this is where I think the metaverse might be something a bit. You see, the thing is, if somebody phones you up and says, "Hello, this is Commonwealth Bank. We need to check on your account. Please send all your money to this other account," whatever it is they're doing on this sort of thing. But in the metaverse, you would know it was Commonwealth Bank because, the avatar that you're talking to would have a digitally signed. I mean, you wouldn't. I mean, the public wouldn't know about this, so this will be under the hood. But the point is, you'd have digital signatures and digital identities and encryption and all this kind of thing. And so actually, it wouldn't be that people will be getting used to the fact that if they're interacting in the metaverse, they have sort of protections they don't have outside. Even to the extent you could imagine that, like if I go to, I'll give you an example. I was in New York a couple of weeks ago, and there's a fantastic scam going on there around JFK. So criminals have been going into the Google Maps and changing the helpline numbers for the airlines to their own scam numbers. So people's plane is late, they ring up the number, they go on Google to find out what the number, what's the number for JetBlue or whatever. They call it, and actually they're through to a scammer, which they don't know about, that sort of thing. But that's because, but in the metaverse, if I go to the JetBlue desk in the metaverse, I know it's them. It's like, because underneath the hood, my system would be checking the digital signatures and the certificates, and So, I mean, maybe you think I've got rose-tinted glasses on this, but I just think it'll be a safer place to do business.
Yeah, what you've said, right, is like when you consider, we're both people who've seen the dawning of the internet, right? And it kind of came, and it was a long time in coming, and it kind of gradually gained momentum. But it's got this place in society where it is absolutely the source of truth, despite the fact that we all know that anybody can go and put anything they want on there, and there's no way to verify it. There's no regulation. There's no kind of third party to ensure its authenticity, and yet we're as a society, we're kind of, if it's on there, it must be true and I must be safe, despite it being probably the most unsafest place, that we've ever had in the history of civilization.
No, I think we're I mean, it's easy for the fraudsters at the moment because people do believe what they see on the internet, but I think that's changing. The internet is becoming an untrusted place where, you can't really believe anything you see on there unless you can see the authentic source next to it. I mean, I quite like the idea that, I quite like the idea of like an online where I can flip a switch on my browser and it'll just say, ignore everything that doesn't have a digital signature that you can verify. I mean, there'd be virtually nothing in that at the moment, but you can see the problems. I mean, look at Mr. Musk. He spent billions on Twitter to try and solve the bot problem as he sees it. And as far as I can tell, it's worse than ever.
Yeah.
So just, there are so many things which are just going horribly wrong at the moment, that it's just not sustainable.
Do you think then we kind of, tear up and, Web 2, Web 3, and it becomes, what we move towards is Metaverse?
Well, I think Web 3 is the transactional mechanism within virtual worlds. Yes, that sort of makes a lot of sense to me. It really does.
Fascinating. It's, this is the thing that absolutely blows my mind, David, right? It feels in many respects as if it's the kind of end of an era in fintech and many kind of technology kind of evolutions that we've seen. Yeah, it's the very beginning of, what I think is truly the digital revolution. We've kind of used that term a lot over the last 20 years, but I don't even think we've even begun to scratch the surface of what that digital kind of revolution will look like.
When I'm working with clients on as input to strategy, I think it's very useful to think in terms of the kind of eras that we're living through with these sort of things. And I think you're right. The fintech era came to an end. The classical fintech era, that's finished. In my estimation, what we're living in at the moment is the open data, open finance era. So things are beginning to open up. You have open banking in places in various parts of the world, connected with instant payments and all this kind of thing. CDR in Australia and so on. So right now and actually on that, we haven't really scratched, we haven't really done more than scratch the surface on that at the moment. There's a lot of places we can go on that at the moment. But then what's coming next, I think, is that sort of Web3, more decentralized, token-based version of financial services. So right now things are kind of opening up. It's really interesting, but where we're going next probably is this kind of tokenized infrastructure. And there, the potential for change is significant.
Yeah. So it's, I guess, hold on tight and enjoy the ride, eh?
Well, it's fun. It's fun working on things again where you don't quite know where they're going to go. Having spent years working on, what you'd regard as like, old fashioned, contactless payments and digital wallet, stuff like that. Where you kind of knew where things were going. You weren't completely sure exactly how fast, but you sort of knew where things were going. It's really interesting to be working in areas again now where you're not really sure quite how it's going to turn out. And that's much more intellectually interesting. It's much more stimulating. It's much more difficult, I think, at a corporate level to form strategies around this sort of thing. But it's a challenge, and I don't know. I really like it.
Yeah, look, it's interesting that point that you've just made, because exactly what I've observed this last 12 months is what I would say is corporate inertia, where everybody's just, I think, paralyzed by what do we do next? And if you talk about the technology we're talking about, and then you look at a bank who still has COBOL mainframes and MS-DOS green screens to do transactions that are worth hundreds of millions of dollars. It's kind of you think, wow, how do we bridge the gap from that to this kind of step into a completely different universe and metaverse? What are the steps that, because it has to happen incrementally, and we've seen so much resistance from banks to give up their core technology.
I do detect, though, I do detect that when it comes to this issue around tokenization, there is something different going on there. I think banks. So the point about using these new technologies basically because they're cheaper, not because of ideological kind of things, means that there'll be a lot of pressure to push in this direction. And I think if you talk to serious people on the banking side, I've heard people say, personally, that, they think tokenization is going to be much bigger than, blockchain or any of these sort of things. And I sort of take that pretty seriously. But if you think where that's going to go, I don't know. I mean, what happens if everybody just starts using PayPal dollars instead of Australian dollars? What if it's cheaper and simpler and easier to use your PayPal wallet to shift PayPal dollars around than it is to log into your bank account and move Aussie dollars around? I
mean, now you're here down under. Where can people find you? Because you've got quite a few events lined up.
I'm doing some private things for banks and other people as well. But yeah, so next week, so 17th is the Stone and Chalk Intersekt pre-event in Sydney, which that'll be good. And then there's Intersekt itself in Melbourne at the end of the month. I'll be on a panel there with Victoria. So there's that. Then next week with John Ryan at PayEd, we have an event at NAB in the afternoon. That will go out on LinkedIn soon. There's the Fintech Cruise in Newcastle.
Yeah, that's my neck of the woods, so I'll be joining you for that.
Yeah, so we're going to be talking digital identity on the high seas. Tomorrow I'm at NAB in Melbourne and Novarti. There's things going on there. So no, there's a whole bunch of different things going on over the next couple of weeks. It's great, Dexter.
Yeah.
You know how much I like it.
Yeah, and look, it's fantastic. I mean, all of the people that you're talking to, I bumped into at Digital Asset Conference just a couple of weeks back, and it's a really interesting time. I think, David, it does feel like that watershed moment where this kind of stuff.
There's a couple of people told me that digital asset thing was pretty good.
Yeah, it was actually. It was probably the first time that I've sat and listened to regulators and been very, very interested and engaged. So
that must be interesting.
Yeah, but look, I think what is what you cannot deny is that I think everybody in that room, whether they were from a bank, whether they were from a regulator, whether they were from a crypto exchange, I think everybody has the same vision, right? Everybody has the same belief. Everybody actually shares the same values. I think the challenge comes that there are just conflicting interests, conflicting, I guess, ideas of what timelines we're working towards and different pressures. And, it's just hard to get everybody together. And we're talking about, these are just the implications of these changes. They're just huge, right? I mean, it's kind of, nuclear weapon style decision making, right?
But don't you agree? That's why it's fun again.
Yeah, exactly. So. Look, there's a lot at stake, and it's, I think one of the great things is that when you have a lot at stake, that's when great innovation, generational innovation happens. And you only have to look at, the race to the moon in the 60s to look at the amount of innovation that happened and the pressure that was on, but also the prize was huge, right? It was just, unprecedented prize. And I think we probably need that as a civilization to focus on how do we build a better world rather than I think what we've done over this last 20, 30 years is just how do we make things faster and more efficient.
Well, I look forward to picking up some new ideas in Sydney and in Melbourne.
Great.
Over the couple of weeks.
Now, look, I just got a couple of other things to ask you. You're an author and you made some really kind of bold predictions in your books, which seem to be coming true. So my question to you is, how long do you think we have before we move to a truly digital economy?
Well, I think, it's true that these things always take longer than you think, but the implications are always greater than you think. So what I think is going to happen is actually we're going to see a fragmentation, because I think you'll begin to see significant sections of society moving into that kind of wholly digital world. I've started calling it cyberbia. As people will be moving out to the suburbs. You have people that will live in the metaverse. They'll do their work in the metaverse. They'll meet other people in the metaverse. And it's actually quite attractive because it's safer and more controllable and all this kind of thing. So, but we have to have some sort, and this isn't my sphere of expertise. You need to talk to people other than me about this, but we do need some sort of national social strategies around this. because the potential for fragment and some people being marginalized and excluded, those are quite serious things. So I think it's a bit like cashlessness. People say, well, how far away is the cashless economy? But for big chunks of the population, it's already here. And what we're seeing is this kind of suboptimal split, and so we need some sort of policies for dealing with this. What those should be, I couldn't say. I'm honestly not the expert on it.
Right. Last question. This one's multiple choice. WorldCoin, is it A, a good idea poorly thought out, B, a bad idea poorly thought out, or C, a Bond villain plot?
I understand what people are trying to do. It's not the way I would do it. I'm not awfully keen on biometric identification like that. I'm much more interested in strong biometric authentication. And actually, you already see there are already news stories about WorldCoin IDs being sold on the black market, and people go and signing up loads of people in Africa just to get the signing on bonus, and then they immediately sell the wallets to people in China or whatever that's going on. So I'm honestly not convinced about it. I haven't taken one apart and looked at it in any detail, but I think that sort of stuff is better done through regulated institutions where you have frameworks and liability and this kind of thing.
Yeah. Well, it's been fantastic to chat with you, David. Great to have you back on our shores, and looking forward to our trip on the high seas.
I'm looking forward to it, Dexter. It's going to be a lot of fun. See you in a couple of weeks.
Will do. And as always, folks, you can connect with me on LinkedIn and Twitter. If you're new to the show, make sure to give us a follow. And if you're watching on YouTube, a like and subscribe. If you're coming back, thanks so much for your support. It really does mean a lot. And it really helps me get great guests like David onto the show. Until the next episode, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures, and you can find us at tier1people.com.